Ladies and gentlemen, good morning. First, I'd like to thank all of you for being here early. Okay. That's a great start. Punctuality is important, right? The early birds catch the early worms, as they say. Not that we like worms, right? So I'd like to thank Exito for inviting me to open the 23rd edition of the BFSI Innovation and Technology Summit here in the Philippines, a burgeoning hotspot for digital transformation in the Asia-Pacific region. With the theme, Innovate, Integrate, Thrive, Shaping BFSI Dynamics in the Philippines, this event serves as a potent platform for knowledge sharing and partnership building among leading professionals in the banking, financial services, and insurance industry. And I'm pleased to offer you a glimpse of the BSP's perspectives on navigating the way ahead for financial sector innovation in the Philippines. Fostering innovation in the banking, financial services, and insurance sector is essential for driving economic growth and stability. A tech-enabled financial sector forms the scaffolding for economic resilience, productivity, and competitiveness in the 21st century. For economies to stay ahead of the curve, governments must adopt, anticipate emerging trends, and proactively shape the future of the digital economy. Central banks, in particular, play a critical role in creating an enabling regulatory environment that promotes responsible innovation while ensuring the safety, efficiency, and reliability of the payment system. The BSP's leadership emphasizes the importance of balancing fintech's role in economic growth with robust consumer protection and financial stability measures. We strive this balance by embracing a forward-looking approach. This means our regulatory and supervisory frameworks are designed to be adaptable to emerging trends and technological advancements. This allows us to keep up to speed with industry advancements while upholding the public trust in the payment system. Our regulatory approach is guided by three core principles. First, the BSP adopts a regulatory approach that is inherently risk-based, proportionate, and fair. This means that regulatory measures are calibrated according to the identified risk within specific activities and how effectively these risks are managed. Second, the BSP engages a wide range of stakeholders to ensure policy consistency and coherence across the financial sector and prevent regulatory arbitrage. A multi-stakeholder approach allows us to promote dialogue, exchange expertise, and address regulatory challenges collectively. Third and last, the BSP prioritizes consumer protection. By doing so, the BSP aims to build trust in digital financial solutions and promote widespread adoption while minimizing potential risk and vulnerabilities for consumers. The BSP has institutionalized the regulatory sandbox framework, which adopts a test and learn approach to welcoming new and emerging financial solutions. By allowing regulators to get a better grasp of both the business and technological considerations of new technologies, authorities can sharpen their expertise and supervision over the sector. Briefly, the approach involves the following steps. First, the BSP evaluates the soundness of the business model, checks whether the proposed solution is innovative, and verifies the proponent's track record and capability to successfully launch the innovation. Second, the BSP gives the go signal for the pilot project to proceed within certain parameters with flexibility and caution. Third, the BSP then obtains a better understanding of the business model while the product is being offered in the market. Fourth, given a better understanding of the business model, the BSP issues appropriate regulations. And finally, the BSP continues to closely monitor developments and introduce supervisory enhancements as needed. With this framework in place, the BSP can ensure that prudential standards are upheld without stifling market innovation. The BSP has crafted and implemented key policies that serve as a springboard for responsible innovation in the fintech industry. And by the way, we did all this during the COVID period, right? So we did just hunker down and wait for the virus to subside. We did this during the crisis period. An important player in advancing digital inclusion, financial inclusion rather, is digital banking, because their financial products and services are fully processed digitally or electronically. Digital banks promote market efficiencies and expand access to the formal financial sector like never before. The digital banking framework, issued under Circular Number 1105, supports the expansion of the use of digital financial and payment services. Currently, there are 6 licensed digital banks in the country under this framework. Starting August 2021, the Monetary Board has implemented a 3-year moratorium on application for new digital banks, including converting banks. The rationale: this allows the BSP to monitor the performance and impact of digital banks on the country's financial system and financial inclusion agenda. The decision also paves the way for digital banks to offer competitive financial products and services to their clients. Another key policy is the Open Finance Framework, issued through BSP Circular Number 1122. Open finance refers to leveraging on sharing of customer permission data among banks, financial institutions, and third-party providers to develop innovative financial solutions. With open finance, consumers are empowered to have better control of their personal and financial data, driving the development of financial products that cater to their needs. In the area of blockchain and digital currencies, the BSP has issued guidelines on virtual asset service providers, or VASPs. Through the circular, the BSP takes a cautious approach to exploring opportunities in managing the threats posed by virtual assets to the financial system. The VASP regulatory framework is aligned with the fintech industry's best practices and is consistent with risk management standards set by international bodies. This includes the Financial Action Task Force on Anti-Money Laundering, Combating the Financial System of Terrorism, and Proliferation Financing. Amid the rapid adoption of digital payments, the BSP continues to formulate cybersecurity policies and measures to safeguard consumers from scams, frauds, and other forms of cybercrime. The BSP is set to issue amendments to the electronic banking guidelines in order to upgrade the baseline security controls for electronic payments and financial service providers. In order to safeguard information security and data privacy, the BSP has been continuously developing relevant cybersecurity policies that require payment service providers to adopt robust technology risk management systems and effective cybersecurity resilience measures. And to ensure that these institutions remain vigilant against cybersecurity risk, the BSP advocates a zero-trust model. This framework recommends that the BSFIs treat any access to their digital infrastructure as suspicious. Such issues must be resolved through verification and security screening. The bottom line is that embracing the promise of fintech in driving economic growth requires responsible innovation. I urge you, our partners in the BSFI industry, as well as newcomers in the ever-growing fintech space, to continue working with the BSP in shaping the country's digital payments landscape. The BSP is determined to step on the gas and push the boundaries of fintech innovation in the Philippines. Thank you and good morning.